if it gets really loud, I'll try to mute myself. But just a
All
heads
right,
up.
cool. Well,
All
I believe we're live already. So let's get started. Good morning, everyone. It is September 11th, so 9/11, so a day of remembrance. And, just remember everyone all gave some and some gave all. And, we seem to be kind of getting further and further away from that day. And it's, we're in some weird times out there. So, we're day after the debate, but let's do this. Let's have some fun today. Talk about some fun things. So we got Ike Hobbs here. We got Joe Farrell and Joseph Cachapalia. So Joseph, this is the first time you're on our live with me. I mean, I've interviewed you probably about a year ago, and I think you've been on Joe's channel also. But why don't you introduce yourself real quick?
Hey, I'm Joe Cachapalia. I'm a real estate agent in San Antonio, Texas. Focus on just working with investors, but really lately, mostly working on my own stuff. Um, that's about it.
Cool. Yeah. So I put Joel's channel also in the comments. So you can, if you go find Joseph's episode on his channel, and then Joseph's primarily on X, right? So you're big on X. I have your profile out there, so go follow you on X, and Ike's also out there on X, man. So that's kind of how we all connected. But yeah, I saw one of your posts, I guess, and you're talking about kind of fractional real estate investing and what you're kind of looking in. And I guess you put Lofty AI and Groundfloor. So maybe kind of talk about that a little bit.
Yeah, as I mentioned, because I only work with investors, I end up getting a lot of newer investors who like want to buy their first property, and a lot of times they'll come to me and they won't even have enough to do like their own house hack or something. I mean, like you need some amount of money for a down payment. You want to have some cash reserves. And a lot of times people will be interested in real estate. Maybe they bought a course or they did something and they think they can do it with absolutely no money. And I kind of got like frustrated with having to always just tell people, you just got to wait, right? Like, I mean, there's nothing you can do. You can wait. And so I came across these, there's these sites like Lofty AI is the one that I've been messing with the most lately, where what they're doing is, and I might not get the technical details of how they're doing this correctly, but what they're essentially doing, somebody owns a property, they move it into an LLC, they break the ownership of that LLC up into a lot of different pieces, and then they create tokens on the blockchain, and the Lofty specifically uses the Algorand blockchain. Not a crypto guy at all, so this is just me regurgitating what I've researched. And so you can go on their site, or you can actually buy these tokens just through crypto wallets peer to peer too. You don't have to use their site, which is one of the reasons I like theirs. I think that it removes a little bit of the platform risk. But so, owning buying these tokens online, and they start for sale for $50 each, actually gives you an ownership right in that LLC. You get voting rights on some of the main things, but they have people that, uh, there's somebody that owns not a controlling stake, but has to keep at least 10%, so that there's an actual person making some of the decisions, but they're almost all third party managed. And then every day you actually get rent. So, like if they collected rent the month before, they break it up into 30 or 28 or however many payments, so that when the coins change hands, you just get whatever portion of the rent that you're entitled to by getting it every day. So that's been I've been experimenting with it quite a bit. I've been posting on YouTube, which I haven't really used my YouTube channel in years, but just to put a place. One of the reasons I got interested in talking about this is, being able to share this with newer investors, but also because there's a ton of great videos out there explaining the platform, showing people using the platform. Um, but almost none of them are actual real estate people. And most of them are confining their due diligence to just the sites themselves. And so I thought it might be interesting for some people to see like what other due diligence I can do on these properties off platform, right? Like, you can look them up on Zillow, you can look them up on, there's just a whole bunch of different ways that we can find out about them. Um, without just being confined to the platform, which it seems like a lot of people are doing. I know you asked about Groundfloor too, but I don't want to just talk straight for an hour. I always give you long-winded responses to simple questions. So.
No, I love it. Joe or Ike, do you have any question? I'm trying to get his channel real quick to post it in the comments so people can go check it out. But
yeah, I like how you started with the outline of some of the investors that you're working with. Some people are ready to go, more experienced. Some people hear about it from somewhere online or whatever, and they want to get into it, and they realize quickly that maybe they're not ready. And me being in the mortgage industry, the biggest limiting factor that I see for people that want to purchase real estate is just not having enough money saved for whatever their purchase criteria may be. And so I love this idea of, okay, I want to get into this, but maybe there's a different way to get into it with, say, fractional reserves and other avenues. What's in your research, what would you say would be maybe the opposite side of the coin, or a hurdle or a negative, or is there a negative with some of this stuff?
Oh, there's definitely, so there's negatives, and I think at the moment it's mostly technical. So you're getting, there's goods and bad as far as the risk involved. So they really push like, oh, you have the diversification risk. I'm buying a little piece of a bunch of things. But on the other side of that coin is you lose a lot of control. You get to vote on some major things, but like if something breaks, you can't just run down and fix it like you could if it's your own property. There's also the technical aspects of the site where the way that they're breaking it up creates an asset that isn't necessarily easy to sell if that platform ever went away. Like the way they are now, you can buy and sell on the platform, but it's a very thin market. I'm actually trying to take advantage of that right now. And when there are properties with problems, I've noticed some of the tokens just go for way cheaper than they should because people aren't getting their rent and they want to sell it. And there isn't necessarily just a ready buyer. And so I think that's good and bad, right? It creates some opportunity if you're really out there looking for it, but you don't have a ton of liquidity. But, at the same time, it's probably more than if you own a property, right? Because, I mean, if you own an individual property, selling it isn't that quick either. But at least if you do sell it, you're going to get 90% of the value after everything's said and done, versus sometimes with these tokens it seems like people get stuck trying to sell them and get I bought some. They all originally sell for $50. I bought some for $26 yesterday, and it seems like there's nothing wrong with the property. It's just they had a rough tenant turn, and that's already been handled, but they haven't replenished the reserve yet. So. I'm trying to think. There's not, the other downsides are just, they handle, so Lofty specifically, because there are other sites too that I'm looking at, but Lofty specifically handles debt in a really weird way. And so if that original owner that moved it in the LLC had a mortgage on it, it's not paid off in that transaction, but the LLC doesn't own the equity in the way that we would normally expect, where the cash flow from the property pays the debt. Everybody shares in it normally. They have a very strange setup where there are tokens reserved basically for the amount of the debt, and the original owner of that property is responsible for the debt 100% themselves. And as they pay it off, they get issued additional tokens. So this does two things. One, it makes it so that you get much higher levered yield up front. And a lot of people don't realize when they're looking at the site and they see their yields that those are going to shrink over time naturally as the debt gets paid down. So you kind of have a reverse of your typical leverage effect there. And then over time, your total yield is going to end up approaching your cap rate. So it's going to go down as that original seller owns more and more tokens, so you get diluted. And so that the other real risk is people look at the yields on the site and don't really realize how they're calculated, and that it's not the same as if I bought into like a syndication where so you have the the risk of there being leverage in the deal. And up front, you're getting a lot of the benefit because you're getting a higher levered yield. But over the course of the whole investment, you actually you don't get the benefit of it, especially from the appreciation part. Because at the end of the day, if that debt all gets paid off, you've only gotten the property level appreciation. You've gotten no levered appreciation, even though in the beginning your cash flow was highly levered.
Can you explain the difference? You said property appreciation versus the levered appreciation. Can you explain the difference?
So for example, if so normally, like if you own a property and I bought it for $100,000 and I have $80,000 in debt, so I only put $20,000 down. If the property goes up in value $20,000, I made 100% return because it's levered, right? Because I only put 20,000 down, I made 20,000. That's 100% return. Mm-hmm. In this scenario, if we bought it for $100,000, sold it for 120, and with the 80,000 in debt, when the original owner pays off the debt as part of that transaction, they're issued tokens for that remaining $80,000, and so we divide the 120 by 100. So we're not represented as just owning that 20%. We get diluted all the way for the 100, and so we only end up getting the 20% return versus the 100% return. And it took me a really long time to figure out what they were doing, and I actually talked to some of the founders. Some of them are on Twitter. Asked them some questions. They have a really robust Discord where there's some very nerdy guys like me who are, were willing to take the time and dig into the structure with me. It's certain, and so I mean I think it's one of the hurdles they have now is they just, especially that company, they set it up in a weird way, right? Like there's no reason the debt has to be treated that way, but I think that they did it because of the lending on most of the properties, wouldn't, because there are a lot of them still just have a conventional loan on it, right? And so I think that the reason that they did it is because they needed that original borrower to still be on the hook for it, and then so they didn't have a mechanism, I think, to have the token holders get debt on properties is what I think forced them into this weird structure.
So let's say you own the property for 5 years and the principal gets paid down by $30,000. Random number. I don't know what the number is.
Yep.
So that $30,000 of mortgage pay down and here like equity build up, that goes to the other side, the seller or the owner, not to the token holder.
Right. So what actually happens is every time he pays down X amount, he's issued another token, and so it dilutes the token holders. It doesn't accrue directly to him. It does by giving him additional tokens, and so that dilutes us. But at the same time, it's diluting us, but you're also increasing your equity, right? Because it's being paid down, and so, which is why I believe your long-term return on these properties are going to be your cap rate, not a cash on cash or something, but actually just your cap rate plus whatever the actual, market unlevered return, the unlevered appreciation is. And so you add those two things together, and that's what you should expect your total return to be on these. So it's really that you're getting an unlevered return, but it's getting front loaded because initially you're getting this leverage on the cash flow, and it's if you look on the site, you'll see properties that are 18, 20%. It doesn't make any sense. Like, how am I getting so much? But it's because the initial percent of that cash flow is so high because of that, the original seller doesn't have their tokens yet that represent the debt. And so you're getting a disproportionate amount of the cash flow early on. I haven't modeled it out yet with what I plan to do that sometime soon, just to see with shorter holds, are you actually better off or not? But so one of the risks I think this creates is if I buy tokens today and they're fully levered properties, those are always going to look better the way they're shown on the platform than properties that somebody bought 3 or 4 years ago, because they're less diluted. Now that can be counteracted by the property performance increasing, so it's not necessarily always going to be worse, but I think that you run the risk of older tokens becoming unsellable because they don't look as good compared to the new ones, and then you just have to hold them forever or until there's some liquidation event at the property level.
Okay, I've got a question for you.
Okay.
So I've got a friend of mine who was trying to help out a property owner. He has 42 single-family properties in a low-cost state, not a high-cost state, but like low cost. So like the average value of these homes is like $30,000 to $45,000 ranges.
Mm-hmm.
So a portfolio over $1 million. And as a lender and trying to find the right options, all the lenders I've talked to that do blanket loans, you know, they have minimum requirements for value for each individual unit. And I can't find a product to get this thing financed to do repairs, then renovate, and then be able to stabilize some of the units. So if somebody does have a portfolio that is bringing in cash flow, can they come to a platform like this and say, hey, I need to generate almost like an IPO, like generate revenue, bring some revenue in the door to then fund XYZ of repairs and stabilize the properties?
They certainly can, but they're giving up equity in the deal, not, you know, it's not a loan. And so,
Okay.
I mean, so so I think there's an opportunity for real estate investors on the other side of this too, because there are some people that will buy a property. There's one young guy that's doing this with STRs quite a bit. He buys a property, he gets it up and running, he sells most of his equity on this platform to recoup some cash to go and then buy his next property. And so it's definitely something that you can use to, you know, to bring in like larger chunks of capital, but it is going to be a sale of your equity. Although you maintain control, and you could sell a very small number of the tokens too. Like it doesn't have to. I would say, at least from what I've figured out so far, most of the people in the original transaction are selling off less than half their equity, and it's because they're keeping enough that it makes sense for them to be able to pay their debt, right? Because that original person, if there is existing debt, is having to pay that.
Mm-hmm.
So yes and no. I mean, it's a way that they could raise some money, but they're giving up. You know, it's not a loan, and so it's not.
Yeah. Which in this scenario, it's like you don't have a lot of options other than going to the private money sector, which maybe that's a better option. You know, like we're talking much higher interest rates, so maybe that's your trade-off to just give up the equity and just keep it simple. Again, purely hypothetical, but
right. The other issue with that is at the moment they all have to be, I believe at least, they have to be just one property per LLC. So I don't know that they could help that a whole portfolio. I don't know. I mean, they might be able to. I haven't seen it yet. And, you know, like I said, I mean, I'm not really an expert in these platforms yet. I'm really just exploring them and trying to bring like more of a true real estate lens to how people are looking at these tokens, because at the end of the day, they do represent some real estate. But it seems like if you look at a lot of the people talking about them online, there's some people that are almost just trading them like they're meme coins, you know, like it's just not, they're just looking what the price action and everything like that. So
yeah, so I want to say morning to Frank, old guy REI, stopping by. So check out his channel. His channel's in the comments. And then Hyder is always here, so Hyder's channel is also there, so go check him out. But Hyder also has a comment, and I think it kind of relates to what you're talking about as far as the, you know, trading like meme coins. But this sounds like on the run and off the run bonds. On the runs are currently issued bonds, off the runs are previously issued bonds. So yeah, I think so. Hey, Renee's here, Forever Landlord. So go follow him on X. If you want to know anything about self-managing, go check out his school community and go follow him on X. He's doing some awesome stuff out there.
And I think that comment is absolutely right when he's talking about the on the run and off the run bonds. I think that that's, you know, related to, uh, you know, when I was talking about that the older, you know, if you try to sell the older tokens, that market isn't as robust, and you might get stuck holding them. But I think that's a good analogy.
Yeah, so I like that you're doing this a lot. Hold on. Well, let's get to this after. But I like how you're kind of doing this for your investors or new clients, like you're saying, like trying to help them figure out a way to get in to real estate instead of having to just wait on the sidelines. So do you see a lot of your clients, taking that leap right now? Or are you still trying to test the waters for them?
So at the moment, I'm mostly testing the waters. So there's a lot of people. I mean, I've been doing this for 20 years, not the fractional investing, but real estate in general. So there's a lot of people that I've gotten into real estate over the years. And so a few of them that I think that have always been like a little bit more willing to experiment have already jumped in because I've talked to them about it and whatnot. Um, it took me probably almost a month to get really comfortable with how the platform works and everything. And I'm going to experiment with it a little bit more before I um, just wholeheartedly, recommend people use it all the time. I think that, I think, and so Lofty is just the one I've spent the most time on. As I mentioned, the other one, there's another one that's Groundfloor that's much different. They're actually hard money lenders that are selling off pieces of their debt. That's one that I actually think is not as won't be as great for somebody who really wants to get into real estate, but seems like a great way to get just decent returns on a portfolio of real estate backed debt. But then they have like Landa homes and arrived homes, and so it's just this whole new world for me. I'm trying to take it, and I've put not not a large amount of money, but enough that I think that it's worth like I put $5,000 on each of the two that I've started with. So it's like not if I lose it, it's not the end of the world, but it's enough that I feel like if I were going to get scammed, they'd already have taken it. Right? Is one thing. I'm trying to put enough in because when they talk about like $50 tokens, like I've seen a lot of people do videos and they buy like 10 tokens, and it's like I don't know. I think you have to. I want to have a lot of these and see how they perform. Because I mean, like whenever I recommend something to a client, I think I told you this a long time ago when we talked. Like I spend a lot of time telling people not to buy properties, right? Like the last thing I want to do is to get someone to buy something and it doesn't work out. And so I'm trying to do a lot of homework on the front end of this. I see it as a real opportunity for people that can't quite buy their own properties yet or need to just hold some extra money for a certain amount of time before buying their next one or those sorts of things. But I'm not 100% sold on the opportunity yet. I'm just putting I'm just putting a little bit of skin in the game to try to figure out like how it goes so far. And like at the moment uh, I'm looking at it seems very favorable. But it's definitely not I'm not 100% sold yet, and so it's not something that I've just like wholeheartedly told every young person that can't house hack yet, hey, do this instead for the moment.
I like that. Yeah, I think it's just another tool, right? And I like that you're testing the waters with it before you try to let your clients or people that in your circle about it. But Ike, you look much clearer now. So whatever you did, your video is a lot clearer than it was before. So
Sorry, I didn't mean
yeah,
to double that. I do have
now
some
your
questions.
audio is like super loud.
You know?
All right, go ask your question, man.
Do you know like what fees Lofty charges, or where do they make their money at on top of that?
Yes. So they're making their business model, and it's different for each one of the platforms exactly how they're doing it at the moment. But Lofty specifically, they seem to be, and I could be missing some hidden fees for the people when they're raising the money initially. Although it looks like it's relatively small on that end. But they're basically trying to create themselves as an exchange, right? Where they facilitate you creating these tokens, but they're making money every time they're traded. And so there's a buy fee and a sell fee, and every time that I've purchased tokens so far, which it hasn't been a ton of tokens yet, um, it seems to be around 3%. But then there's also like, it depends. So like sometimes when you'll buy them, they'll also collect like an additional 2 or 3% because you have to fund the reserve or something that's associated with your token or whatnot. But my understanding is it's supposed to be 3% on the buy and 3% on the sell. But it is, every time I bought it, it's been a slightly different figure, and it's because they're collecting these capital contributions at the same time.
Yeah.
And I think that, and a fee when you're doing the original tokenization, which I'm not sure what that is because I haven't looked into doing this with a property of my own yet, are the two ways they're making money. But when, like, I've watched some videos of the founders being interviewed, and they really seem to, they want that buy sell fee of the tokens trading to be their main source of income. And I think that's actually really good for people investing on the platform, because it means they're going to be incentivized to create some real liquidity on there, right? Like to attract people that are going to be buying and selling those. And so I mentioned, I think one of the big risks is being able to sell your tokens later in the process. Well, it sounds like they're setting it up so they have an incentive to make it so people will come and buy and sell those. I think it's kind of interesting that, it ends up being 6%, which a lot of people, it's going to be hard to say that's too much to buy or sell real estate, because that's, traditionally you've seen that number a lot when people do that. But, it is an additional fee of owning that real estate, right? Because when if the property gets liquidated in real life, you're also going to pay a commission there. And so you'll get a double hit at the end of the day. Although I don't know when they liquidate your token at I'm not sure what happens there. And that's something I need to look into as well.
Well, Hyder has a great comment. He says, when I was a newbie investor, I threw $5K at a REIT without researching my exit. Now I feel locked in as an exit is very difficult. Know your exit. Well, hold on. I got to plug my charger in so somebody can talk. Hold on.
Yeah, I think that's a real interesting comment. It sounds like it must have been a private REIT, right? Because if it's public REITs, you get to just buy and sell those on exchanges, and so you have an easy exit there. So I'm assuming he's saying that's a private REIT. And yeah, sometimes you can put money in those and they're just stuck.
So I was going to ask, but then I looked up the website. So you can see the actual address of whatever one you're investing in.
Oh, absolutely. Yeah, you can see the address. I mean, they give you all of this. They give you a lot of due diligence. They give you an appraisal that was done. They give you all the documents from that transaction. So they give you a lot of stuff on their site. But then, and that's been sort of my point in the videos that I've been making about it, is that you can do a lot of off-platform due diligence because you have the address. You can do a Google Street View and walk up and down the streets, which is something I do just in my business every day anyway. You can do, look it up on Zillow, on homes.com. If it's one that they're using for short-term rental, I stick it in my AirDNA account and look and see if the way it's performing matches up with what AirDNA says. You can do you can look up the county records for it and make sure that it is the Lofty entity that owns it. So yeah, I mean, that's I think one of the things that they give you the address, and it's a real piece of real estate in the world that you can figure out all this stuff about. And I don't think enough people are doing that due diligence before buying a coin, and because they're like, well, it's just a $50 token. But if you're going to buy more of some of those properties, I think you really should do that. And really, even if it's somebody like, I'm actually trying to help somebody just learn more about real estate investing. It's just a young person I've been talking to. And even if they are just putting $50 into it, I want them to do all that due diligence on every one of them before they buy each one, right? Because they're going to learn a lot about the property and about maybe why this deal doesn't work and another one is better. So.
Hey, what's up, Jack? Thanks for stopping by. Go check out Jack's channel. I'll put it in the comments. But he had a great interview with Michael Zuber recently, so go check that out on Zuber's channel also. But I also put Joseph's YouTube channel, so if you want to know more about what he's talking about the fractional real estate, go check it out. Also, go subscribe. But Hyder says, yes, Realty Mogul, I get monthly distributions, so not a loss, just not a lot of control, which is a Jason Hartman commandment. Yeah. Yeah. So Joe, what are you seeing? This kind of maybe pivot a little bit, but you know, I think CPI came out this morning,
Yeah.
softer than what they were hoping, I guess. And
Yeah.
what do you think rates? What's going to happen? You think what's going on with rates?
Yeah, I do just want to just take 1 second and just mention one thing regarding the mindset of an investor, right? You know, we always talk about on this channel, you know, when you purchase real estate, sometimes it may take 4, 5, 6, 7 years to really see the fruits of your labor. And so really it is, you know, real estate is a long-term game. And the idea of panic selling is not part of the game. It's like you said before, Joseph, it's hard to sell. It may take 30, 60, 90 days to be able to sell a property. And so when you combine the idea of token trading and crypto and NFTs, you have this connotation of flipping or trading and this faster paced type of mentality. And so I love that on this website, it literally says, you know, this is a true set it and forget it investing. And it just reminds me that, you know, people that come into these types of plays thinking this is going to be a true flip, it's really a conflict of intentionality with this. And so just want to say that out loud that, you know, it's still real estate investing. If you're going to purchase a coin in real estate, it's a long-term thing. It shouldn't, in my opinion, be looked at as a short-term type of trade or a flip. So I do like that on this website. This is the first time I've seen the website, so I have a lot more research to do on this myself. But back to rates, you know, the prime rate's 8.5%. Fed's probably going to lower the Fed funds rate, which is at 5.5% right now. So technically, right now you've got the 10-year Treasury that's below the Fed funds rate of 5.5. The 10-year Treasury is 3.6. So a level of reduction in rates is already, in my opinion, priced in to an extent with the 10-year Treasury. The 10-year Treasury is again your basic barometer that the layperson can kind of get a gauge of which direction mortgage rates are going to go. I think from the standpoint of what rates do the rest of the year, I wouldn't be surprised if we see maybe a little bit of a tick down on rates. Right now, if you look at the general rates published on, say, Freddie Mac's website, it's around 6.3. I wouldn't be surprised if we see maybe a dip of 0.25%, maybe 0.5%, maybe you see in the upper fives in terms of getting to a rates with no points. So maybe a little bit of a tick down. Rates are still historically attractive. I've got clients that are doing government loans, FHA and VA, that are getting rates with a point or a little bit more in the mid fives. So people that have the desire and are comfortable to purchase, rates are actually pretty attractive depending on the situation. So I just think the confidence level is at all-time lows of real estate. The biggest question that I have from a first-time home buyer is, well, what if the market goes down? And the mentality behind that is, I just put away $25,000 over 7 years or whatever the time frame is to save that much money. I put all this time and energy into saving money. What if I lose it all? What if the market drops and it's all gone? That's, I think, the biggest fear that I see from the average, especially first-time home buyer. I mean, we've seen the average home price more than double in the last 7-8 years. So I think there's just a lot of fear and uncertainty from a lot of the people that are engaged in the housing market.
Yeah, I think Hyder makes a great comment somewhat on that. It says short-term and long-term. My life has really improved since I started thinking long-term, 10 plus years, right? So that's the hard part. You're kind of scared in the short term, but if you're thinking long-term, you know, it's going to be very beneficial. And like you said, real estate's a long game, right? And I know you got to bounce in probably a few minutes, and I know you have a lot of big things on your plate. I don't know if you want to give maybe a sneak preview of what you're working on, or
Yeah,
just
I can.
touch on it, or
So what's crazy is that, speaking of long term, my mindset on long term has also changed. Like I've got too many things that I'm trying to work on, but I'm passionate about these things. I got a day job, I've got a family, I've got kids, I've got a podcast that I'm kind of on a break, gearing up for the next season. It's going to be called 100 Stories of Increasing Income, something I'm very, very passionate about. And I put a post out today that 54 million households are making less than $60,000 a year. Can you imagine a household of 2 or 3 or 4 trying to live off of $60,000 a year? Your dollar has been devalued 25% in the last 4 years. People are struggling to pay the bill. So the purpose of what I'm trying to do is to try to show ways that the average person can try to find an extra income stream to make an extra $1,000 a month, et cetera. So that's one thing that I'm working on. And when I say time frame, my business is worse than it's ever been. I've been in mortgages since 2006. So this is worse than 08, 09. So the resources to be able to pay for help or leverage time, I don't have that luxury right now. So I'm doing this all on my own. And so I have to have grace with myself that I tried to get this thing put together and launched by June. It just didn't happen. And so I had to come to terms with, I'm gonna have to just do this on my own and be okay with when I do it. And when I do it, it is what it is. And so long-term thinking, it is what it is. I'm going to be working on this for a long time, and we'll see what happens. On the flip side, I had an opportunity to put together an event. It's in the tech field. It's going to have 3 high-profile tech founders with multiple high-dollar exits to do an event in Chicago. And right now it's slated for November. And once I have it 100% buttoned up, I'll be able to share more about it. But again, it's a vision that I had that I wanted to be able to do, and gonna work on this and get as far as I can. And when I do, I'll share it. But yeah, it could be a pretty cool event. And from a personal branding standpoint, when you meet people at certain levels, it just opens up doors. And so one cool thing that we're going to be doing with this is that we're going to be doing a mastermind. And with the mastermind, we're going to be pairing up some of these founders with small businesses in low income zip codes in Chicago and St. Louis. And the competition will be who can help these small business owners increase income and profits the most. And the winner will get a certain level of prize. So it's going to be a little bit of a unique event. And I probably in a week or two, I'll have more to share about it. So it's a lot of work, but it's going to be a lot of fun.
Awesome, man. Yeah, you sent me a little preview of it. I was like, whoa, this guy's doing some big stuff out there. So yeah, I can't wait to see it, man. Keep pushing it, man.
Appreciate
it. I put your channel in there again. So everyone who hadn't subscribed, go out there, go subscribe to Joe's channel. He's falling behind me a little bit.
I don't know.
We're racing together, but
I have a question for Ike. So because your full-time job, I think in the firehouse.
Yep.
Yeah, part-time.
How many properties do you have right now?
I'm at four properties, 7 doors.
Okay. When did you first get in?
Very beginning of 2022.
Okay. What is your take right now on 5 years? Opportunities. Does the same blueprint work going forward? What's your take on just kind of the next horizon for portfolio?
Yeah, I'm probably a little different because I dabbled in real estate stuff without owning since about 2015. But for me, I'm proceeding with caution. But where I'm at, we don't see a lot of appreciation. But I don't see a lot of people. I don't see the bottom dropping out in my market because a lot of people have a lot of equity or just own them outright. So I'm trying not to get over levered and I'm trying not to get ahead of my skis. But other than that, I think it's pretty solid. And the cash flow here is where I'm at in the Midwest. It's pretty good. So I think if I lived back, like I used to live in Tacoma, and like some of those, like once you start dealing with those prices and what people make and can go broke, that's when I think it gets a little worse. But where I'm at, it's kind of like, hey, I don't see how I get a whole lot lower than what it is right now. So I'm optimistic. I'm just trying to learn right now and build, and then hopefully it'll do a lot more as the years go down. So
cool.
I know what company you can start and make a lot of money is get a new internet company in Kansas, and you will make money because you're cutting in and out, man. But
still cut out.
I'll see you guys. Thanks, Mark.
All right, thanks, Joe.
Nice to meet you, Ike.
But Hyder has a comment. He said, "Is there a no hair requirement to work at a firehouse?"
Now you
It's a
just have to look
stressful
at
job, Hyder.
work
Come
at the
on.
house.
Solos is here. Thanks, Solos. I'm not first time seeing you here, but thanks for stopping by. Don't forget to hit that subscribe and like button. But thanks for stopping by. But yeah, so Joseph, what's going on in your market? You are in the San Antonio market, correct? How's the rates and what do you think of the NAR settlement affecting your business?
So, I mean, our rates are pretty much in line with what Joel was talking about, and we have seen. So my team's been super busy. I think the last time I talked to you, my goal was to add a couple team members. I've done that since then, and we have been busy all year. I don't look a lot at our overall statistics in the market. I'm just really focused on what we do, and this is going to be our best year ever. But we focus a lot on really nice properties that sell for short-term rental. Those have all been killing it. We've been doing new construction for long-term rental. Those have been selling really well. Stuff that's super slow. I think I was doing some land flips last time we talked. Land has slowed down a whole bunch. Condos, I have one condo that I listed for a family member that had been a rental for a while, but she's trying to sell it, and that one is one of my longest running listings ever. I mean, like, condos are just not selling right now, and I'm not, this has never been a market that condos are very popular, but overall, like I said, I mean, I should look at our actual market statistics more, but I don't, because stuff just keeps selling for us, and on the other side of that, I actually do know quite a few agents who have left the business this year, and so it's hard for me to get that. But I'm working almost entirely with out-of-state investors, and then also too, with a lot of our business this year has been people selling off parts of their portfolio that they bought 4 or 5 years ago and have a ton of equity in, and so that's made up some of it as well. I think especially since the rates started coming down again, though, it's just been I'm working way more than I want to. I mean, just to be perfectly frank, like I probably need 2 more team members to be able to, and I just have 3. I have 3 other agents and me. But it started off with just me 4 years ago, and I'm not trying to build something big, but I don't know. I mean, it seems like things are going much better than we deserved them to be at the moment. Like, it's just, you hear people complaining about their market, and it's just not what I see here.
I know. I asked you if you want to hop on with us. I'm like, yeah, do you want to do it at 11 a.m. Eastern? You're like, oh man, that's like when I wake up and I'm kind of getting my day started.
Right. No, it is early. I like to get a nap in every day. So I mean, I'm at the back half of my career, right? And so it's part of why I've built a team, is because I just get way more inquiries than I can reasonably handle. And so I started having other people, I started referring stuff out, and then I was like, you know what, let me just train someone to do this. And then it was another person and another person. But yeah, I really believe in real estate as a lifestyle business, right? Like, I mean, you can hustle hard and make just crazy amounts of money, but I don't know. 3 or 4 years ago, I decided, like, I'm really happy with my income, and I'm going to work a little bit less every day and try to maintain it versus just trying to double it every year. So, a lot of people just have these new income goals every year, and it's like, I'm making plenty of money. I just want to figure out how to maintain it, and it make my lifestyle better. And it's I have a chronic disease, so that's part of the napping. I'm not just pure lazy, but it is, it's nice. I pick up my kid from school every day. I get lots of video game time in with him, and other family time. And I think that's one of the things that you can get out of this business that you can't get in a lot of other places. And so I'm taking full advantage of it for sure. I mean, you can tell I'm in my recliner couch right now. Like, this is where I do most of my work, so.
Yeah, no. So there's a couple of directions I want to go with this because you brought up your child, and I know I want to talk about you buying the silver and the coins.
Oh yeah,
but,
yeah.
But Jack also has a comment or a question here. So he says, can you talk about your land flips and how that works? Does he take them up? Oh, hold on, the comments just moved. Does he take them up to where they are blueprints, or does he just hold them and resell them later?
So for me, I've done a couple different things, but I'm always the main thing that I'm doing to create value is adding owner financing. So I'm buying lots all cash and sometimes listing them immediately with owner financing. But usually I'm focusing, a lot of times I will, I might get a rendering done for, so like one, I bought some that were like very odd shaped little lots that I think a lot of people would look at and assume you can't really build anything there. And so in that case, I'd go and get an architect to just draw up a site plan and renderings, but didn't do anything beyond that. So I've done that. I've done where I included complete plans. And again, usually it's just when the lots, I focus on buying lots that most people, when they see them, don't think that's a buildable lot. They're like, what? So there's one that I bought that literally looked like a parking spot. And most people that called on it, even when I relisted it, if they called from the sign, they thought the house next door was for sale, and the sign was just put in front of their parking. Like it was that small, but it was something that you could build because of the zoning. It was very dense zoning, and so you could build this tall, skinny house there. And that's the people that bought it from me. That's what they did. So sometimes I am including some plans or mostly renderings or site plans, but the real value comes from me providing financing. So it's a way for me to create those. Go ahead.
What kind of terms do you do on that? And are you just trying to short-term finance it until they build something and can refinance that, or how does that work?
So I've had a lot of different terms. Usually I'm asking 9 or 10% interest. If it's, and I'll amortize it over 10 years and give them a 10-year term. But they will, a good percentage of people are going to pay that off early because if they want to go get construction financing, they have to pay off my debt. If they're going to build on their own, then they don't. And, it's sort of across the board what people do with it. But I think that, a lot of them are just going to end up paying it off early once they have their construction loan in place and know what they want to do. But like I've got one guy who bought a piece from me, and it turned out it was just like he was just the neighbor that bought it, and he just wanted to extend his yard, and so he's going to, I'm sure, pay me over the whole 10 years. And but it's something that was like a little lot. I probably bought it for, what did I buy that for? Like, I want to say I spent $17,000 on it. I sold it to him for $35,000. That was one where I had actually paid for a site plan, but he obviously didn't need it because he was the neighbor. But I had cleaned it up, and the seller that I bought it from, I had to buy it all cash. He bought it from me. I think he put $5,000 down. So he didn't have the $17,000 to buy it, but he had $5,000 to put down. I get about $400 a month for it. So it's a fantastic return for me. It is a little bit of a hassle because I'm going to have to collect payments for the next, well, he's been paying me now. He's probably been paying on that one like 2 years, I think. So, sorry. I know I always just give you these long rambly answers, and I forgot what the question was.
Hyder basically said, selling the rocks is what got me. I totally understand selling trees for lumber, which is not that easy, but didn't really see value in rocks. And he says stone rocks, not crack rocks. Yeah. But I forgot to mention Jen. Thanks for stopping by. Jen is got a shout out at Midterm Rental on Facebook. So it sounds like she just got her first midterm rental booked, and that's a space she's dabbling in. And Hugo stopped by, so Stay Winning Podcast. Go check him out. He's doing awesome stuff. He probably knows more of the crypto space than we do. And then Dennis is stopping by. So thanks, Dennis. I know Dennis is taking a little break from real estate. So kind of like what you were talking about, Joseph. We got to find that balance of, maybe family life, work. If you are going to do real estate, he started noticing that he was digging too deep into real estate, like, just evaluating properties, trying to do all of this. And maybe he was losing focus on the family side or spending time with the kids. So he's kind of taking a step back and actually looking at more like private lending or lending money out to get some returns on that. So even like the fractional real estate might be something good for him to look into, where, like you're saying, it's a little more hands off, and you kind of just placing your money in these investments and getting a return. So Dennis, if you're out there, maybe that's something you want to dig into deeper, or reach out to Joseph, or check out his YouTube channel. He's talking about that on his YouTube channel. But go check out Dennis's YouTube channel also too. But thanks for stopping by, fellas. But yeah, Joseph, like I said, I want to kind of also dig into, like you're talking about, picking up your kid from school. But I just always see you post on X too about picking up coins, right, or silver with your
Right.
son and doing that. So talk about that a little bit.
Yeah, so that's something I started. It's probably it's been at least 2 years, maybe even 3 now. I started off in life without a great financial education, and really, then that's an understatement. And so, a big goal of mine is for my kid, by the time he's a grown up, to really understand the world of finance. He doesn't have to go into it, but I want him to understand how important investing is, understand money. And so, like, I would take him to our rental properties. I'd take him to, he's had an account since he was a kid that's had stocks in it, but none of this really like clicked for him as like what we're doing. And he's 10 now, so he was probably 7 or 8 when I started with the silver. And so I decided what I was going to do is we were going to just once a week stop by the coin shop and buy an ounce of silver. And it's something physical that he gets to hold. And so I think it made it more real for him. But my real goal was to teach him that, investing isn't something, it's not a once in a while thing. It's not a whenever you feel like it or you get a windfall. It's something that it should be programmatic. It should be something you're doing all the time. And so it gives me a chance to once every week have a short, drive to the coin shop with him. Gives me an opportunity to be like focused on talking to him a little bit about investing, about his money. We go and all we're doing is buying generic silver rounds. So, it's right now they're like $30 a piece. I think if you wanted to do it as a monthly thing, if that was a little bit too much for somebody, the real goal is to have him understand that we're buying something, talking about it's a hedge against inflation, which it definitely is if you look at long-term silver. It's obviously not the best investment in the world, right? Like, I'm not putting some huge portion of my net worth in it, but I buy some for myself every week too. But it's a tangible thing that I can do for him. Because of the time we started, I think when we get finished, I think when he's 18 and he's off on his own, I have about 500 ounces, and it'll be a significant chunk of change for him to take with him and do something with. But I think that the short discussion on every drive each week, and him learning to track the price of something, and that's something fun we do every once in a while. We look at what's today's price and we count up, what he's got. And I think we started, it was like $18 an ounce. And so he's already seen like, oh, I've made some real money on some of these. And on a couple of them, we probably paid a little bit more than what they're worth today, because there's been some spikes too.
Where are you buying these at? Is that like a pawn shop, or you go on a coin shop?
We go to our local coin shop. It's almost on the way home from his school, so it's really easy for me to just pick him up. We drive over there. There's a little premium on generic silver rounds, but because they're generics, that's not the big premium you get on like Silver Eagles or something like that. And that's the thing. Like, I understand like if I were going to buy large quantities, I'd probably get them on SD Bullion or one of the online sellers where you can get a little bit better of a discount. But my goal is really that weekly interaction with him about it, not necessarily just getting the best return on that particular investment.
I don't even know if there's a coin shop anymore in Hawaii. I know there was one a long time ago. I gotta go take a. I know I looked. I think I looked up the last time we talked. I think I looked after, but I don't remember. Oh, Trade Better has a great question. Thanks for stopping by, Harrison. I know you're busy, man. But he says, do you sell on eBay? Do you let him sell? I guess the silver or.
So it's interesting. It's an interesting question. I've supported myself as an eBay seller at different points in my life. Like I spent a couple years selling on eBay. I'm not doing that now. I have, but I'm not letting him sell. He's holding all of these, and that's part of the thing is I want him to see the benefits of slowly amassing something. And it's already the case. Like, I mean, we're running out of places to bury it, right? Like it's he has like a lot of silver now. But it's and I say that mostly jokingly. Like I think if you do have large amounts of metals, I think a safety deposit box is the right answer. Some I don't know. It's not something you want to keep like a lot of in your home. I think you sort of, especially if you're public about it, like I am, that we're going there all the time, right? But no, so he's not selling any of it. But it is, I think selling on eBay is an awesome way for like young people to start making money and be a little entrepreneurial. So I love the question because it's something. I mean, I started selling on eBay in 2001, I think 2001 or 2000, maybe 2002, but so a long time ago, and have always dabbled with it. I haven't for a couple of years sold anything on it, but it's I think anybody who's like a young aspiring entrepreneur, it's a great spot for them to get started, right? Because there's all these different ways to find value and make money.
Now I'm just imagining you having a room like Scrooge McDuck or something that you go swimming in.
Right? I mean, that's what, like, I don't know. I mean, so what's funny is I've met other, they call them silver bugs, right? Like, or silver stackers. And like some of them do just have an insane amount in their home. And like, I guess for silver, you're a little bit okay because like someone's going to have to bring in like a hand truck or something to steal it all, right? Like it's not like if you're keeping gold and they can, walk out in one trip with a ton of money worth of it. But it still is like, I wouldn't be comfortable with the amount that some people keep in their homes. And I think it's another important lesson, right? For the kid is like, it is not, because it's not free to have a safety deposit box, but it's worth it, right? Like so sometimes you're paying for things it's kind of like getting insurance on your investment property, right? Like people always complain about that, but it's like until you have to use it, then they stop complaining. So
you don't do any gold; it's all silver.
We get a little gold occasionally, but the reason I picked silver is because it's something that I can afford to buy him some every single week, like clockwork. We did, when we did gold, I was thinking I was going to do it a couple times a year, but it's like whenever you do that, especially for a kid, I feel like even if you do it quarterly, it just seems random, right? Like he can't like grasp like 3 months ago. Like time just works different, I think, for kids. And so it didn't seem like it was making the same kind of impact of just like doing something every week.
I love that. I got to go research again now if we have a coin store in the area or in Hawaii. Like I said, I knew there was one a long time ago, but a lot of them closed down.
We have a surprising amount here. There's a lot of. Oh, go ahead.
No. Go ahead. Yeah. I mean, you're Texas,
saying,
man. I mean, shit.
Right. And I mean, San Antonio, people don't realize, but it's a big city. Like it's the 7th largest city, the city itself, not the MSA. And so we have a lot of everything here, right? And so there's one really close to me, but I probably on a regular basis drive past 3 different coin shops that, are all pretty similar to the one that we go to.
I'm sure Mark, if you get on Facebook Marketplace or Craigslist or whatever your local thing is, you'll find someone. Might be a little
That's
speedy.
true. Yeah.
There's always
If you
Dennis
do, you
says,
definitely have to get a testing kit,
that's great advice. Dennis
which they're
says, I
cheap.
sold all my gold recently. Wasn't a ton, but a little over $1,000. Didn't see a lot of growth from it over the last several years. I kept it. I don't know. Maybe I'm stupid. Kept all my silver though.
I mean, that's the thing. It doesn't really grow, right? Like it grows relative to money, right? But like if you put gold in a room and you leave it, it's always going to just be the same amount when you come back. So it's not the same as a nice cash flowing investment, and that's the downside of doing this strategy. But I think that for what I'm trying to do, it's really working. Like I said, I mean, I don't think necessarily. I mean, I actually do like precious metals as some part of the portfolio, but I don't think it's something that should make up, a really large part of anyone's net worth.
Yeah. Trade better with another great question. Would you recommend kids invest in Legos? I always hear they raise in value more than gold and silver. Me too. Yeah, I think the hardest part is you buy them and you want to open it and build it. Because I think you kind of but I think there's a space for that also. I think people sell built Lego kits already to people and you can make money. So I think
They,
there is
they
a
definitely do. So
market for that. It's just a fact that you got to keep everything. Yeah.
this is I'm into way too many things. So my kid is a big Lego player, and we go to this. He goes every summer. We take him to this camp that's just at a secondhand Lego store. So they're selling these put together sets, and you can get the old sets completely sealed from them and stuff too. Um, but the thing is, like, there are hundreds of new sets that come out for Lego every year, and I would bet 90% of them are worth less 10 years from now. So you have to pick the right ones. But a good friend of mine actually just got some of the old Harry Potter sets, and those are worth a lot more than what he bought them new. And I don't know that all the Harry Potter ones are, but the specific ones he had are. And so I think those are interesting. They're more, they don't have intrinsic value, right? They just have the emotional value and the like, sort of like baseball cards and even throw in Beanie Babies and stuff like that, right? Like, so they might have a value for a certain period of time, but they're not. And I think if you're somebody super knowledgeable about it, and it's something your kid really wants to get into, I could see that being a way to actually make money in the long run and have some good investing conversations. But if you're not going to let them, if you're going to let them play with it, then I think it's tough, right?
Yeah, that's the hard part. But yeah, like you're talking about, there's money to be made everywhere. You just got to find, maybe what you're interested in. And like you're saying, you chose silver. I mean, that works for you. And like you said, it's an easy tour on your way back from school, and it works for you. And yeah, I think that's what it make it kind of convenient also too, where it's not like it's a hassle to get there or to do it. But
Right.
I love that. Hyder says, go clean out Hoarder's house and find tons of Legos. I bet. I think they sell by weight in some cases. Yeah.
I need to find those hoarder houses because that's not been my experience.
Jack thought I said invest in bagels, not Legos. He didn't hear me, but he thought they were talking about investing in bagels.
I love bagels. It's
Yeah.
not a bad idea.
What was that, Ike?
You got to finish the rest of Jack's comment about bagels.
Let me see what he said. Okay, I'll put it up there. I didn't read the whole thing. I seriously misheard that last question. I thought Mark said, do you recommend kids invest in bagels? I hear that they're raising in value. Oh, Jack, killing me. But go check out Jack's channel. Jack's doing some cool stuff out there. But like I mentioned too, he had a great interview with Zuber. So go check him out. That's a great interview out there. But yeah, so Ike, I just want to remind you, I play you in fantasy football this week, man. So I gonna kick your ass after all the shit you're talking in week 1. But
My fantasy team plays as well as your Bears.
hey, the Bears are 1-0. That's all I have to say.
So
It doesn't matter.
my
It doesn't matter how
they
you
did not
win.
look good, so it might be a rough season.
It's the first game of the season, man. But they're 1-0. That's all that matters.
We were playing the Broncos, and I don't know, I'm not happy. So we'll see what happens.
Oh. What's your team again? Seattle?
Yeah.
Yeah, you guys suck. But so what you got planned for the rest of the day, Joseph? Take a nap?
Well, I probably will because I have to get up early for this. But no, we have. I got a bunch of stuff going on. We got several closings this week, and so I got a lot more work than I want to. But then the kid gets home in 4 hours, and we'll probably play video games after that. So.
I love that. Well, I mean, you're always welcome to come on. I mean, like
I appreciate
said,
that.
No, I mean, I hope you had a fun time. This is kind of how it is. We have a lot of comments and questions coming in, and it's fun. We try to pick one main topic, and then whatever questions kind of roll in. But yeah, anyone that may have missed the beginning, the main topic was kind of talking about Joseph had a post or tweet or whatever you want to call it on X about fractional real estate investing. So we kind of dug into that a little bit. So if you want to know more about that, go check out his YouTube channel, go subscribe and see what he's digging into to help his new investors, or maybe prevent people from just sitting on the sideline waiting for things to change. But Ike, what else you working on, man? You got a new deal or anything in the works, or what are you working on, man?
Right now I'm cashless, so I'm just working. I got one rehab project I'm working through, and then I got some maintenance stuff. Got to try to get done before winter. So I am not buying anything right now unless I find a private lender. So the banks tell me I've been talking to a bunch of banks, and they don't like the fact that like 3 of my units just started making money this year, so they're not on my tax returns, and they don't like that.
Yeah.
So I'm probably not buying anything until next year, but it is what it is. Probably a good thing for me to slow down a little bit, make sure I got my other.
Maybe you can write off internet for a business expense. Maybe you can upgrade your internet and write it off on a business expense.
Yeah. I don't know.
But did you polish your head for this episode? Because your head looks extra shiny today.
No.
I don't know.
I'll wear a hat next time.
No. Look, I just was wondering if you
gotta get yourself one of these.
Yeah. See, that's what I was trying to say.
Do. Mark, next whoever wins this week, the next week you have to wear a Seahawks hat if I beat you next week.
Well, I can always find one in the trash, I guess. I'll go pick up a hat.
I don't know. People don't.
But that's fine. That's fine.
I think you guys, you're really missing an opportunity. You wouldn't believe how many real estate discussions this starts in real life.
No, I think I asked you last time where you got that from when I interviewed you.
What does it say?
Yeah, I just keep getting them made on.
Right?
Yeah, but this is probably my 5th one that's exactly the same. They're just from Amazon. You can go on Amazon and buy a hat and just type whatever you want on it. So you pick the font, you pick the words and the layout. And so that's all my wife did on the first one. And I just keep getting the same one. Because I think it's a little bit funny. Like people they don't think highly of real estate gurus. Right. And so it always starts conversations. But I mean, I think that, for me, you can't tell because when we're sitting here and I'm in my living room, I don't seem introverted, but I will never talk to anybody in real life. Like they have to talk to me first. And so something like this just makes it happen just all the time.
Yeah, I understand.
Ike knows what's coming after you said that. After you said introvert, I know Ike knows I'm going to say he's an introvert also. But you guys are not introverts. You guys are.
If you saw me in the world, you would I will never walk up to a stranger and talk to them. When people talk to me, I'm uncomfortable. I'm perfectly happy talking to people one-on-one, and for some reason I have no fear of the internet. Like I'll post dumb stuff on there all the time, But like, get me in a group of 4 people, and you won't get a word out of me unless somebody asks a question. So
yeah, no, I understand that. Mark doesn't.
What do you mean? I'm an
And I would
introvert
call
too,
you an
man.
introvert
What is that?
from here on out. I'll just bring it up.
Oh, smart to wear PE turned RE. That's another guy you got to go check out, Joseph. He's in the Washington area, but he's a PE teacher doing real estate. His first house hack he had no shower. And he basically made a separate room. Yeah, he would shower at the gym. He would shower at the girlfriend's house, the mom's house. But now he's on his second house hack already. And now he's upgraded. Now he has a shower in his second house hack. But he's doing some awesome things up there.
It's a nice upgrade.
No, yeah.
I'm glad that you mentioned it's PE was physical education. I read that as private equity turned real estate. So.
Oh, then you wouldn't have followed him, right?
Right.
I got a question for you. When you said you were looking for other ways for people to start when they don't have money. How much does a first time, like, trying to think how the question would go. How much if someone comes to you and they're willing to house hack, but they want to invest in real estate, would you say they need to have in their pocket?
Did you say they're not willing to house hack?
No, they are willing to house hack. So how much would you
say? They are willing to?
You got to have this much to be legit.
Yeah, I mean, so in my market, I mean, you can house hack with a really small amount of money, depending, I mean, you could have 10 or 15K and, get the seller to cover some of your closing costs, and you're just using an FHA loan for 3, because I mean, you can buy a brand new construction home right now for $180,000, $200,000 in a place where, and you can have 2 roommates in there and do pretty well. I mean, not like the best part, not like the, there's obviously nicer parts of town where you can spend more. But yeah, if they're willing to house hack, you don't need a ton of money, right? But I mean, you still need, guys, I get questions from people that like have 50, like $50 is going to be like, oh, I don't know if I want to invest that. There's all these people that hear you can invest with no money. And, I have done a lot of no money down deals, but I would never do a deal if I had no money, right? Like, you want to have money left over for when you buy it, you move in and your water heater breaks that day, or, any number of things that could go wrong. So, yeah, I mean, I think that there are just a lot of people that get excited about the idea, but they're a year or 2 of savings away from actually being able to pull the trigger.
Yeah.
And then there are just plenty of people who don't want a house hack.
Everybody's popping in late, man. I think people slept in today. Everybody's tuning in. So we got Late Start Wealth. He's in Florida. He just closed on his first kind of, is it a quadplex house hack kind of style? But he just closed on something in Florida. So congrats on that, man. MJ stopping in. So MJ, hopefully get you on Friday. So hopefully you got a topic. Trying to get him on the live on Friday. But Curtis, if you're still here, did you see my Bears on Sunday? Yeah, 1-0.
How about that QB?
But yeah. Hey, first game, Peyton Manning. He's the first #1 quarter pick to win in the past 22 years. Their first start. Hey, it's a win.
Take it.
I don't think you can do a no money down deal until you have done an actual down payment deal. That's what Late Start Wealth comment. I don't think you can do a no money down. Yeah, I mean, I don't know. That's kind of a risky position, I think, to be in. I think there's a lot to learn. So
there's definitely some exceptions to that. Like, my very first duplex was it was my first property, period, but it was a duplex. I bought with a VA loan. I got, rebates from the lender, which was allowed at the time. Maybe you can't do that anymore. And closing costs from the seller. So my very first deal was a no money down deal, but it's because I could use a VA loan and house hack. But I think he's right in general. I think that it is doing no money down deals. They exist, and there's all kinds of ways to make them happen, but not if you don't. I think you do have to be experienced first. I think it's tough to just jump right in and think you're going to have no money and no experience and somehow make those deals happen, right? It's because usually no money down means you're using somebody else's money somehow.
Very true. Well, I got about 5 minutes left. We can wrap things up now, or if you guys want to talk about anything else before we wrap things up. Anything else you guys want to discuss or throw out there?
What are you?
I am just curious. Oh, go ahead.
I was gonna say, what are you working on, Mark?
Well, I just submitted papers for my HELOC finally, but we'll see how much I can get for that. But yeah, just getting all my paperwork and stuff together, and just busy. I'm trying to figure out if I'm gonna rent my house out, but I'm trying to just get my house cleaned out and move in with my parents because mom's gonna have hip surgery and they're getting old, and trying to get situated there and just renting. So it's just it's a nightmare. So just trying to figure things out and figure out how I'm gonna do recordings if I'm there, and so yeah, just trying to get everything situated, but it'll figure itself out.
Yeah.
Is that something?
Got to wing it, right?
Is that something you've talked about a lot? Because I think it's something that a lot of people don't like to really share, and I think it's a good strategy a lot of times. There's been a number of different times I've moved in with family members for short periods of time and rented out an old property, or like I actually think it's a strategy that, like, I think you're doing it for personal reasons and it makes a lot of sense, but I think it's a tool that I think is out there that a lot of people kind of feel ashamed of when they utilize it, right? Like, I think it sounds like you're doing it more to help them, but like, I mean, I've moved into my in-laws' home at different points in time when we had when I was really just getting started in real estate, and had the home that I had been in that I rented out, and it wasn't for a long time, but it made for a good transition. So I think that's kind of interesting that you're doing that, and you're going to rent out your place now.
Yeah. So it kind of, so I don't know if you know Anna Kelly. She's kind of in the one rental at a time community also. She's a
I don't know her, but I've seen her on there.
So that's kind of the beginning of her journey too. She initially bought like the big home and everything, and then realized like, hey, so she kind of downsized to move in with family, and that's how she kind of got her real estate journey going. And you probably follow him on X also Inspired Landlord. They moved back in with their family in-laws, and they rented out their other house. And so the same thing, yeah. I don't know if I'll call it reverse house hacking or whatnot, but I think, like you're saying, there's a lot of options out there. And even Ned, who comes on the channel quite a bit, that's what he's doing. They sold their big house to move. Yeah, so I think more people are doing it. People are starting to realize it makes a lot more sense. And like you're saying, for me, it's a little bit more just my parents are getting old, and every time I'm there, I'm just spending, cut my toenails or flip my bed over, or the printer's not working, or the TV doesn't turn on. And I'm just constantly there for hours. So it's just easier. And
right.
And like you said, financially, it'll probably be like probably like a $4 to $5 grand swing, just doing that. So
yeah,
it does make a lot of sense. So yeah, and just trying to get situated, like trying to still take them to appointments, still trying to get my house cleaned out, and stuff like that. So that's where I'm trying to balance everything. But so and still try to do these lives and everything, but I'm glad for everyone tuning in. So it's a lot of fun. I have fun. So let's see, maybe one last question here before I wrap things up. I gotta get my son ready for school. All Nighter Hider says, that's my strategy too. I'm living on my parents' property in my own paid for and built tiny house. Yep, I'm on site handyman. It's a win-win. No shame in my game. Hider, that's it, man. You're amazing. Go check out his YouTube channel. Also, he's doing some cool stuff out there. But yeah, any final thoughts before we wrap things up? Can I get you back on next time, Joseph?
Yeah, no, I really appreciate you inviting me on today. This has been a lot of fun. And obviously, I'm willing to talk about real estate anytime, and probably more than most people want to hear. So I appreciate it.
Cool. You had a final thought to wrap up, or you're going to say something before that?
Oh no, I wasn't.
Oh,
No,
okay.
I was just gonna say just that. Like I thank you for having me on. I appreciate this, and it's been a lot of fun.
Cool. Ike, anything?
Yep. Just follow me on Twitter or
All right.
whatever.
I'll get you a Bears hat for next week.
I might have one actually, but I'll send you a
All
PR
right. Well,
one
thanks
tomorrow.
everyone for stopping. Yeah, thanks everyone for stopping by. I know it's been a long time, but like I said, just remember today's 9/11. So just remembrance and just not forget that day, right, everyone? So thanks everyone for stopping by. See you guys again.
Thanks. Bye.